Good morning. It's Friday, July 21st, about 6 a.m. Central Time. Looking at the precious metals overnight, they're slightly weaker. You got gold down $5, 1965. You got silver down 3 cents, 24.93. You got copper down 1 at 3.82, and you got platinum down. It's just about unchanged here. We're sitting right at 9.64. So, it was a big risk-off vibe, and today we've got triple witching, which means you got option expiration going on for a lot of different products here, not only on the futures, but also the U.S. equities. So a couple key themes that I'm watching here on the FX side. We had that UK CPI that came out a couple days ago, and it was lower than expected. And really what it did was it marked the top on the euro currency, the British pound, and it caused the US dollar to be up about 5 out of the last 6 days. So that's going to put pressure on a lot of different commodities out there, especially those dollar-based commodities and commodities that are key export commodities, things like agricultural markets. So overnight news, you had the Bank of Japan. They said that there was little need here for yield control. So if you look at the Japanese yen right now, it's down about 1%. Further adding some strength to the dollar, and that's most likely the reason why the precious metals and the grain markets are under pressure here in the overnight session. So yesterday you had the initial claims number come out right at 7:30. That was lower than expected. That means that you're really seeing this resilient labor market, and that's going to be a more hawkish Fed. So that was kind of like you had this couple 1-2 punch on the precious metals yesterday. That was kind of the initial thing that set off that market. And then you had a change in the sentiment with a big break in U.S. equities. It was really fueled by Tesla from the night before. We saw Tesla down quite a bit. It was down like $20. So I was trying to keep an eye on that one. And the reaction in the NASDAQ, and then the spillover effect on a lot of different metals and things like that. So, next week, we're going to have a lot of economic data. And everything from Monday, you got these Eurozone, UK and US, the flash PMIs. You've also got consumer confidence on Tuesday. Wednesday, you're going to have the FOMC meeting. You'll have new home sales. And then on Thursday, you got a whole bunch of stuff. You got the ECB meeting. You got GDP, initial claims, durable goods. I mean, just a ton of stuff. And then Friday, it's the Bank of Japan. So a lot of volatility expected next week. I mean, this thing's going to be all over the place. So you might be able to buy at some of these really low levels on the precious metals, or even get another opportunity to lighten up closer to that 2,000 mark on that August contract. Remember, the August options are going to come off next week. So there is going to be some volatility. Most likely some of those the market makers are going to try and peg it at certain levels. So we'll see what that is, whether it's 1950 on the August gold, who knows, 1985. There's a lot of key levels out there that they would have the options, the bulk of the options expire worthless. So we'll take a look at that one as well. You got any questions, give me a buzz here, 312-858-7303. Remember, futures option trade involves risk of loss, may not be suitable to all investors. Good luck, good trading.